Yeah, right there. I think that's good. Yeah. Okay. So I'm gonna show y'all something about how to make automatic money investing. And if you got fear of investing, don't worry. I'm gonna explain some things in this video. This might not be the only video, but I'm gonna explain how this works to a degree. And show you some of the images and everything and stuff like that. Let me get my screen shared. Screens shared, might as well say, since I just like showing everything. So the two main websites slash apps that I use is, M1 Finance and Webull. But you can buy this also, I think, in Robinhood. Can you buy it in Robinhood? I think so. Robinhood, I think. Yeah, I believe so. And I'll explain more about M1 Finance compared to Webull soon. So this is the dividend history, and this is how you make the automatic money. Because myself and others who have invested, um, I don't know if you like me, but I've gained and lost a lot of money. And others may have also, but over my period of time from investing and losing and gaining, I've found, to me, the safest way to invest where you automatically make money guaranteed. There's no winning or, well, it's no losing here. It's a win-win all the time through the way that I do it and how I learned to do it. And I'm going to share it with you. So it's some people that are dividend investors, and you may have never heard of a dividend, and what you're looking at on the screen is a dividend. So from the last, actually everything on this list is dividends, but some dividend payments are higher than others. So what a dividend is, it's a payment from certain companies. Like you see certain companies on the screen, you see Apple, you see MasterCard, you see Walmart, you see eBay, UPS, Target. I forgot Target pay dividends. Microsoft, etc. Right. So what you see on the far right is the amount of pennies or dollars that they paid me for holding a certain amount of shares of that company in the stock market. Now, the pennies are not a lot, of course, but the more shares you have, the more they will pay you, depending on how much they're willing to pay per share. And that might sound confusing to some of y'all, but don't worry, I'll try to catch you up on some of that in the future. And if I don't get it in this video, then maybe in in-depth video on whatever I don't cover in this one can be in the next one. But so let me just explain the company that I found. So during the pandemic, and after all the time I invested, no matter if it was stock market or cryptocurrency, all of that time, what I found out is all my gains and losses that I made, I've lost hundreds, maybe even probably thousands, and I've gained hundreds and gained thousands. So I've lost and gained. So out of all that time, I found out that the way I was investing wasn't the the most beneficial for me, because I wanted to gain, but I wanted to gain fast. But I started to only just want to gain. And no matter what I tried, all the ways I've tried to gain, I always lost also. So I got tired of the risky part of it, and I just decided to just go with dividends. And this is what I'm going to explain how dividends work, what it is, and blah blah blah. So dividends is, as I said earlier, but I'm gonna go more in depth. So dividends is something that a company like Sony, Walmart, etc., if they pay dividends, not all of them do, but some do. and certain ones pay more than others. So you see some of my little payments on the side, and then we even got one a dividend deduction from Sony, which is something I've never even seen before. I just found out about that tonight. Like I didn't even know this before. But um so the last company that I found, because when the pandemic came, this is where I was gonna go to. Um I was going into, like, when the pandemic came, I was like oil. Oil started going up. You might not have known, but like just in general, the oil prices went up when you went to the gas station, or you noticed, right? Or when you just drove by, you noticed gas went up, right? So gas was booming in sales. They was making a lot of money. So it was a smart idea for somebody to invest in oil or something in that area because oil was going up and everybody just kept buying it. So what I wanted to find was something in oil, whether it was a gas station or just something in oil. So at first I found this company called MRO. Is the ticker down here at the bottom. Let me move this down here. It's still down here. I'm sorry. Marathon Oil. And okay, I just had to check to see if any comments was on because I'm not looking at any screens. But Marathon Oil is a gas station that is in my area, and I rarely see it. But when I first saw the stock, it was really cheap. It was like $5 or something to buy per share. But as time went on, when the pandemic hit, it started going up. I saw it go up to $6 to $7 to $8, and I'm like, man, I better get it before it go too high because BP was already like 20 to 30 something dollars per share, much more expensive. But this one was still cheap. So I'm like, I better get it. So I started to buy it. And it had a dividend. It had a dividend. And I don't know what the dividend per share was. It could have been 3 cents. But I ended up selling it overall. As you can see, I ended up getting a few shares to get me a total of 78 cents at June the 10th, 2022. By the time I decided to sell, that was around the time I sold it all because I found something better. So I found something better in oil. I wanted something that would pay me the most in dividends, but was cheap to buy because I'm not a millionaire. I'm not a six-figure guy. A hundredaire. I consider myself like that, like a hundredaire or a thousandaire. But that's my lifestyle. Like I don't make these big numbers, so I can't buy the most expensive things and like flip it, like buy a tremendous amount and it go up and then I make a lot of money. Now I can't do that. Millionaires and people that make more than me can do that. It's easy for me to buy something really, really cheap and buy a lot of it and then it go up. That's my lifestyle, right? So I wanted something really, really cheap that would pay me a lot in dividends. So I found in oil, by the way, because oil was booming. So I found this company called MV Oil Trust. You see it at the top, and the ticker is MVO. And it paid at an average at the time when I found it 35 cents per share. And I'll break down how the math goes with what you will make and all of that. We can calculate, but 35 cents per share was pretty good. And at the time, it was about $9 and something to buy per share. Wasn't bad. That was the cheapest out of all the oil companies I found. And that would pay me a pretty decent dividend. So I was thinking, at the time, I had about 6 to 7 different companies. And I was like, should I sell everything and just throw all my money into MV Oil Trust and just try to like live off the dividends, or like not live off, but reap the dividends. And I was thinking, like, future wise, how much money could I make from these 6 or 7 different stocks compared to what I would make in the future from the dividends? And I just estimated, like, let's just say you make 200 from each company in the future at most. Well, that's only what, 6 times 12 or 7, 1,200 or 1,400, something like that. Not a lot. And this isn't dividend money. This is just what the company would give me for it going up that I was basing it off of. And you might not understand what I'm saying either, but maybe in another video I can break all that down. But I thought that I can make way more money in dividends than, you know, the 12 to 1400 from these other companies in total, right? So I sold everything. I had about 800 left in money after I sold everything. And whatever I had left, I just decided to just put all into NV Oil Trust all at one time while it was cheap. When it's cheaper to buy, the better. So while it was like $9 or something, I just put everything in all at one time. So what you see at, let's see, June 20, no, was it June 25th? Yeah, June 25th, 2022, the dividend from NV Oil Trust was 67.14. I'm gonna go over some mathematics and show you the calculator or how to calculate it, how it works in a minute. But that was my first dividend, which was unexpected to me because for the amount of shares I had, I thought I was gonna get half of that. But what happened was they increased the dividend pay. At the time when I first found out about it, the dividend was 35 cents per share. So when I did the calculations on the amount of shares I had at the time, I was thinking I was going to get like $31 or 30 something dollars in dividends. But since they raised the dividend to like 70 cents per share, it doubled what I expected to get. So for my first dividend, it came out to be more than I expected. The company at times raises the dividend and lowers it. I have no control over that, but it turned out well for me. So it was unexpected though. But I still based the dividend at the 35 cents per share because that was what I came in on. That was the standard to me. So that's what I based it off of still. But and this is how the payments go. So let's just say you take a couple of hundred or thousands and you put into this company or any company that pay dividends, but specifically this one. Certain companies pay every quarter, so 4 times a year, or maybe I should say every season or every quarter or about every 90 days or 91 days. Um, excuse me. This one follows that pattern, and a lot of others do. Some pay twice a year, some pay every month. Is that it? Every month, every quarter, every 6 months? Yeah, those are the only ones I know. So this one is 4 times a year. And so we'll get into the calculations in a minute. But for the next dividend payment, I didn't expect this either. Um, it was October 25th, 2022. I thought, well, let's just say I was surprised again. They raised the dividend. Well, I think they actually lowered it by like 3 cents. It was 67 cent per share. But I made even more because as time goes on, I have it set up to where every Friday, $25 is automatically taken out of my account and transferred into this investing software or program, app, website. And I have this website specifically to automatically take whatever goes in and automatically invest it into this company. So I don't do anything. All I do is make sure $25 is in my account to be taken or to be covered. And then I have it set up to where it does everything for me. And even the dividends that they pay me every 3 months, I have it set up to where I don't spend it. I just have it reinvested back into the company. So at this current time, that those payments aren't going to me to spend. They're going right back into it. But that's okay for now. So for the next 3 months, it went up and I made about $20 more in dividends because as time goes on, I'm currently buying into it every week. So every Friday, I'm buying in automatically. So basically, this is how you will never lose. This is what I found out is the best way to invest. If you always buy in every week, when it's high, when it's low, if you always getting it, you can never lose because you'll get it when it's low. You'll get it at the best price. You'll get it at its highest price. You'll get it at its lowest, but you'll always get it. So you'll always win. But if you get in, because this is what I used to do all the time, and you might not understand it, but I'm gonna say it anyway. So I used to do this all the time. I used to try to predict when to buy in, when it's kind of low, or when I think I should buy in, which is a lot of times I've been wrong. I would buy in at the wrong point and then go up a little bit and then it drop and I lose money. Lots of money. It's happened a lot of times to me. So instead of trying to guess and predict when I should buy in and maybe win, which is risky, I don't do that anymore. I buy in when it's low, high, mid. I get it all times of the year through this, and I haven't lost. And there's two ways of winning this way. You win by the stock going up automatically. Like, let's say you bought it when it was $9 per share. And I'll go ahead and show you a calculation of this. So you'll learn like one way how you can make money through investing if you don't already know. I need to shrink this calculator. It's so big. Okay, there we go. $9 per share. Okay, so let's say it's not. I thought I typed it in the calculator. I did. Why did it do that? That's weird. So $9 per share. So let's say it's $9 per share, and you buy. What just happened? There we go. Let's say you get 100 as an example. We'll start with a low number. We'll go with 5. We'll just start small. So let's say you get 5 at $9. So you would times it by 5. So 9 times 5. I really don't like how they search something when I put it into the calculator. I don't understand. Why does that happen? That is weird. So we'll do 9 times 5, and that will cost you $45. So then let's say that company goes up to $12 and your 5 shares will now be worth, so it'll be 3 times 5, right? I'm trying to figure out. I wish it was an easier way to hit the times button, but it's not. I gotta actually click it each time. That may be the only profit. Is that the only profit? I think that is, because you've only bought 5 shares at $9. So it'll be the profit, which is $3 times 5, the amount of shares. So it'll be 3 times 5. Yeah. So that's not a lot, but the more shares you have, the more it'll multiply. So let's do a bigger number. So let's say at $9 per share, you bought 100 shares. I don't know how much it'll cost, but at $9, we can figure it out like this, or just enter it in the app or website that you're buying it on, and sometimes it'll give you an estimated price, but some don't. So, so let's say at 9 times 100, which is 900. So I don't really need the times it. I already know what it is, but I'm gonna just do it anyway. So it'll cost you $900 to buy in at that price, $9 per share, if you want 100 shares of it. And it might sound expensive, but since this is just one way to gain money from the stock market, I'm just showing you this example. This doesn't count for the dividends. That's a totally different payment. So this is just one way you can make money, and it'll be 900 for you to do that, and you'll have 100 shares. So now let's say it goes up to $12, and let's see. So that would be 100 times what, 3? Okay, so what's 300? I don't even need to do the math on the calculator, but so that'd be 300. And if you want, at this point, you can sell it and keep the 300, and then you can try to reinvest in again and make more money that way. But that's risky. Not saying that it won't work. It's just risky. What I would prefer is holding it, because this particular company is a dividend making company. So it's like a retiring fund or something that Just imagine like one day if this can be enough to pay for your rent. I don't know what your rent is, but just imagine. Just imagine like 1,000 coming in every 3 months, or 4,000, 12,000, depending on how much you build it up over time. It can be something that benefits you hugely in the future. Mine's is small right now, but I'm seeing the benefits of it. Like right now, it's at a just from the dividends. I'm not worried about selling the whole thing yet. And that might be huge one day too if you build it up and then you want to actually sell it. It could be worth 60,000. I don't know. I don't know what the future will be, but just throwing numbers out there. But let's just like think of some numbers, and I do calculations, and I could do some of that here too. But just throwing some numbers out there. So like right now, I estimate at a basic dividend payment that I would get maybe 60 every 3 months that I won't be spending, but 60 every 3 months. If I was taking the dividends and spending it on something, I could pay my whole phone bill for a year with that money, because I have a phone bill that cost, if I pay, because I paid up a whole year, and it used to cost. I just switched my plan to the cheaper plan, which is 180 a year. So it's gonna be like 200 with tax this year for the whole year. Um, but 60 times 4 is 240, if I'm not mistaken. Yeah, it should be 240. I don't think I have to do this calculation, but we'll just do that. So I estimate that my basic dividend at 35%, 35 cent per share, will be this. I'm basing it off of the standard dividend. They raise it and lower every now and then, so I don't know what it's going to be. It could be higher than this, which it already was, I think, but I'm just basing it off of that. But this is enough to pay my whole phone bill for a whole year. One of them. I got three. But that's just one out the way, right? If I was using that money, but I'm thinking about the future, like if I get more shares, what the dividends will be. Like it's getting to the point where it's possibly going to be 100 every 3 months. And I'm looking forward to where it can possibly be like 200 every 3 months and higher and higher. So as things like this happen, my mind is going, how can I get more dividends? Maybe I should put in more money. I should sacrifice. I'm thinking like that. So that's one calculation on how you can go about it. But here's another future calculation for, like, let's just say you do this for 20 years or 15 years or something, or a long, long time, right? Let's say that when we bought in, if we all do this, or it could be another company, but let's just say you got in at $9 per share, and 15 years later it goes up to $29 per share, but you got in at 9. So let's just say you put in by this time 20,000. How much would 20,000 have gotten you? And let's see. So we'll do 9 times 20,000. Oh crap! I put a 2. Sorry. Oh my goodness! When I hit enter, it hit the 2. That's one. Oh, that's a lot. But it's 180,000, right? That's a lot. That's a lot. But just imagine. Now, this is interesting, because you would have, if I'm not mistaken, okay, at $9 per share, it would to get. Am I doing? Let me make sure I'm doing this right. Times 20,000. Yeah. So to get 20,000, yeah, if I'm understanding this right, 20,000 shares will cost you 180,000. Yeah, that's got to be right. This is crazy. I don't know what this is gonna be. So it will cost you 180K. So basically, $180 will be in this account for backup. Like this is your safety net. Also, like a bank account or an emergency fund. If you ever needed it, it's there. So you can also look at that as another emergency fund if you needed to take some out. But if you left it in, and let's say it goes up $29, how much profit would you have? Let's see. So what I got to do? Times 20,000 times what? What's the profit? 9 goes up to 29, so 20. So 20 times 20,000? Yeah, okay. 20 times 20,000. And this isn't even dividends. This is gonna be crazy. I hit the enter button. I've been thinking when I hit enter, it's just gonna give me the, but it doesn't. Okay, so it just doubles it. Well, it's more than double, but it's a little more than double. But basically, it doubles it. Now, that's just the profit from the stock going up itself, $20. So this is what you would actually have instead of the 180, but the 180 would be what you put in to get this. So the profit would be like 220,000. Yeah. Yeah. So the profit will be 220,000. And you can sell it right here if you want. And just, of course, you got to pay taxes. They're going to take their cut. Well, actually, they won't take their cut. You have to give them their cut. And that's all you do. But you will owe them. So, because once they find out that you got this, they're going to want their cut. So, don't forget that now. You got to give them their cut because you don't want to spend it and then you owe. And then you be trying to find a way to pay them. So, that next year, whenever you take it out, you're going to have to pay a cut to them when you file taxes because this is considered free. Like you're going to get basically all this back and they're not going to get their cut when you get it. So you got to give them their cut manually. They're not going to automatically take their cut. So just let you know that's how that works. So this, if you used to like a W-2 or W-4, this is not those type of tax returns. This will go on like a what they call a 1080 or 1040. It will go on that. This might be foreign to you, but like just know it's a different type of tax thing. Instead of receiving, if you used to receiving taxes, you would pay for this part. Sorry about that. So that's that part. That's one way you can benefit. Now the dividends is another thing. So let's just say for 15 years, oh man, I don't even know how much money you would make off dividends, but how could I? So I would take 20,000 times 35. Okay. All right. Let's see. 20,000 times. I'm gonna just do the basic. 35 cents per share. Oh, I hit the wrong thing. Nice. Okay, that's kind of something like what I want one day. So 7,000 will be what you would get automatically. This isn't something that you have to like do anything extra for. If you have this amount of money into this company at the standard dividend that I'm going by, they could raise the dividend or lower it, but this is the standard that I go by, 35 cents per share. If you have 20,000 shares of it, which will cost at $9 a share, 180K, that's a lot. But if you build it up, this is what you would get automatically every 3 months. You don't have to do anything for it. Just leave the money in there. Don't sell the whole thing, get all the money out. Like just hold it there and they will pay you this. Banks won't do this for you. You can have 180K in the bank and they'll probably give you they won't give you this much back. Like the little bit of interest that they will pay you back, they're not gonna give you this much money. But 7,000 every 3 months, that's 7 times 4. What is that? 28,000. That's pretty good. That's pretty good. Now I don't know what you would do with that. You can fix up your home. I don't know. It's up to you. Do what you do. But that's pretty good for me just for doing nothing. Like this is passive income in a way that I understand and that I'm going for. And I just thought as mine's built up, my little slow snowball effect, I thought to share this with y'all. And you might not understand everything that I'm saying, but I can always do a more in-depth video on how to do it, how dividends work. I can walk you through it. We can do it together. But as I do it and I sacrifice and try to stay committed to doing it, I'm seeing the small benefits. And it's slow for me because I'm only putting in 25 a week. And that's just through one website. I haven't even told you about the other. I see Sheena and Connie. Sorry, I didn't say that properly. I just seen y'all comments. I'm not looking at any other screens right now, so forgive me if I'm late. Sorry, y'all. But just sharing how you could make some passive income if for whoever's for. It's not for everybody. So this is the other website slash app that you can use that I use too. It's called Webull. You probably heard of it, but Webull is a second website. It's like a backup that I use like a lot of different investing websites and apps, but you use what you prefer to use, but I use what has this company on it because I'm strictly NVO only. Like I do cryptocurrency too, but not really. I'm mainly just doing this because crypto is risky and I'm trying to do crypto as like least. As you can see on the side, on the far right, I have Shiba Inu. These are cryptocurrencies and Dogecoin, but I have very little money into them. So I'm not risking my money like I used to with them. I made money with them and I lost money with them too, but I'm just saying, like, I'm not really into that like that. But so this other site is like a backup site. I have way less money into this than M1 Finance, but as you can see on the far left at the top, it says 812 and 20 cents. Then you see under it negative 2033. That's what I lost. But don't worry about the loss because the way I'm investing, I'm not going to lose. It's already been proven I won't lose. So this one though isn't set up to automatically take $25 out of my account every Friday and automatically invest it on its own. I can't do that on this website. All I can do automatically is automatically have it set to take 25 out of my account and send it into this account. And it just stays there. So that's why you see also at the bottom of it, buying power, if you can see it good enough, 264.38. That's what I have to actively, if I want to buy more of the company, I can. But I'm waiting until it goes down to the cheapest price, and then I'm gonna just buy a whole lot or whatever amount, and then wait. Since I manually have to do it, I'm gonna wait until the best time to do it. Now, that's another way you could do it, but I'm trying to do it the smartest way possible. I'm not gonna buy in at its high point because I've been watching it for months. Actually, I've been with this company for a whole year, so I know how it operates based on what I've seen, and it pretty much has a pattern. If you learn the pattern, you pretty much know what to do. You pretty much know when to buy it if you have to buy it manually, and you pretty much know when not to buy it. And I've learned how high to go and how low to go, so I wait until it gets at its lowest point, and then I buy it. Other than that, I just let money go into the account until I'm ready to buy it. But I've already bought a certain amount of shares, so I'm gonna show you what this website dividends have been looking like. So as a total, you can see in the middle, it says profit and loss right here. I can't highlight it, but it says for last year, it's going just for the whole year, and it goes over the dividends. I just wanted to show you the dividends because I'm mainly just focusing on the dividends. I don't really care what the company does, like going up and down mainly. I'm just waiting for the dividends because this is for me how I can win automatically. And if the company goes up one day and, if I want to sell it, cool. That's a win-win, but this is my main win automatically because this is automatic. They have to pay me this regardless of how well or how poor the company does. They have to pay me anyway. So that's my win automatically. So I'm gonna show you the dividends. So as you probably already saw it, but it says that my dividends are $41.67. Not a lot because I haven't put as much money into this one as the other, but I'm gonna show you more in depth of what I have with this one. I know it's small, but I'll make it bigger in a minute. Let's see. Okay, at the bottom, these are just for Envy Oil Trust. I've had other companies and cryptocurrencies, but this is just for this company. So At last year, when I first discovered it around that time, I only had like I think 15 shares at that time on this website. So for 15 shares or for whatever amount of shares I had, they only paid me in dividends at that time $3.50, if you can see it. And then right above it, 3 months later, I had a little bit more shares, but not a lot, not a lot. So they only paid me $9.59. Small numbers, but I had little shares. I haven't put much in it. And then the next 3 months, $12.71. And my latest payment was $15.87. And I only have about 46 shares total on this website because this one doesn't automatically invest for me. I have to manually do it. So I'm holding my money until the right time to buy it. But I'm still trying to get as many shares of it as I can because the more shares you have, the more dividends they pay you. And let me go back and give you the whole calculation of all my dividends combined from this site and the other site, so you can get the whole picture. Any questions y'all want to ask, ask while I'm here. Let me see. And even after the video. So this is this M1 Finance or the other? No, that was the other one. Oh, they signed me out. M1 Finance was like, look, we signing you out. That's okay. I wasn't moving around, I guess. So I'll get that pulled up. Hold on. Let me do it this way for privacy purposes. Since I gotta sign back in. I didn't know it was a time limit that they would sign you out, I don't think. All right. I'm back in. How y'all doing tonight? Since I don't know if y'all still with me, but how y'all doing out there? Okay, let's bring it back. So now I got to find all the dividends again. Date range, symbol, activity type, trading. Yeah, we'll leave trading in. Deposits, no. Cash movements, I don't think that matters. Position changes, we'll just leave. Just give me dividends. Just give me dividends. Okay. So for the whole year, and remember I discovered this like about a year ago. So I haven't known about this for that long, but let's see, June was my first. I think I found out about it in June. It was June. So my first dividend was 67. We'll just round it off to $67 in June 2022. In October, 87. We'll round it off to 87. And might as well say 88. And then January was 64. And then another 64 this month. So 64, 88, 67. I'm going to just put that in a calculator. Hold on. Oh boy, 64. Look at this. Come on, man. I clicked on the calculator. They need to get it together, man, for real. 64 plus 64 plus 67 plus 88. And then on my other one, I got like 350 plus. I don't even remember those numbers. I know one was like 15. I think another one was 12. And another one was 9. So we'll just round it off. Oh, I didn't mean to hit that. Equals. Okay, so as a year's total of dividends, which I'm surprised is this much, but it was 322 about. It was about $322.50. Not bad, not bad. And most of that I'm automatically reinvesting back into it to give me more dividends, because in my mind, the more dividends, the more money I'll get faster. And excuse me, remember, I'm only putting in 25 a week between these two sites. So it's just really 50 a week, just being divided into two sites. And then basically sooner or later, just going into the same company. And I'm getting paid from each, site, the dividends. And the goal is to just build it up to where it's something nice one day. It's like maybe, just futuralize it. Just think about it. Like, I'm gonna just ask whoever's here, whoever would answer this question. SoFi out here. Oh, Connie says all good. SoFi is a good one. Yeah, I've heard of SoFi. All okay, cool. Now I'll just ask everybody here for like a futuristic question, because I know for me, I like getting a random 100 or 200 out of nowhere, like just a random check for something that I did. So I'm gonna ask everybody here, if you want to answer. How would you like it if you just got $100 out of nowhere, like every 6 months, or every, I don't know, 3 months, or or 200 every 3 months, or every so often, like just randomly, not from your main source of income or part time or whatever you're doing, whatever income you're already getting, just not included, just somewhere, just given to you, like boom, here you go. You do whatever you want to do with it. Like, to me, I think that's good. I would like it. I like having it. And I kind of look at this as a YouTube payment replacement, because YouTube pays me also, but I don't get that much money from YouTube. So YouTube was paying me about 100 a year, or maybe 200 a year. So that was my kind of random 100 every now and then, or 200 a year. And that was kind of nice. It's always nice to get a check every now and then, but YouTube has slowed down for me, and I've been gone for 6 months. Like, I didn't really put anything out like that. So of course, when you're not really doing anything, the money slows down depending on your content. So my money on YouTube slowed down, and I kind of don't care. So this is my YouTube replacement, and I don't have to do anything for it. Just make sure I have 25 or 50 in my account, and it pretty much handles itself. One of them does, and I just manually have to do the other. Now Connie says it sounds good. I agree. Now, this might not be for y'all, but for whoever's for, it's for. I just, as it's building for me, and I see what it's doing for me, I like, maybe I should share it with other people. Or I should properly say, because I didn't say it properly, should share it with other people. So that's basically what I'm doing. But if you don't understand how it works, how investing in the stock market works, or in cryptocurrency, or how dividends work, just let me know, and I can do a future video, go more in depth. But I just want to share that this is the result so far. It's not a scam. I wouldn't be fearful about it. Investing is biblical. It's verses about it. It's in multiple scriptures about investing. People think it's wicked and evil, some people, but I've gone over that and I've shown the scriptures. If you haven't seen it, then I can share it with you also. But yeah, this is what I'm doing. This is my small snowball effect, and it's small right now, but I imagine the future. Because the way I'm working right now is crazy. The way I'm working right now, and I thought to myself earlier today, like, this can't be my life. This can't be my life. I work, and then I come home and I keep working. And it's a scripture somewhere in the Sing Gospel of Peace. I don't know if it's book 1, 2, or 3, but it's somewhere in there that it says that we're supposed to work 8 hours a day, sleep 8 hours a day, and read and study 8 hours a day. That might not be word for word, but like, I don't get 8 hours of studying or reading every day. I hardly get 4 hours of that every day. I'm slacking. And I imagine how better off spiritually I would be if I could actually do it. Like, most of my day is working and gaming or some sort of entertainment, and it's just not where it needs to be. But Yeah. So anyway, I have to work a lot, and I just think to myself, will it ever be better than this? And I'm like, yeah, it's gonna be better than this. And to me, this is a part of me making it better. This is my way of making it better. It's small steps towards a better future for me, God willing. So yeah, I'm gonna just keep going that way. But if anybody got any questions about it, want me to go more in depth, and I probably will anyway as time go on and just share more and more of how to do it. I actually do need to do another video about it anyway. So I guess that because I had this 6 year plan or 7 year plan where I planned to make like 60,000 in the stock market from this plan. Like I'll be having these calculations, and you see what I did with the calculator. So I can basically like plan out the future of what I can make if I put a certain amount of money into it by a certain amount of years. If I stick to it, and I had this number in mind, but that's God willing, depends on. But if I could do that in 7 years, that would be great. Sheena says, I'm still learning about the stock market. Yeah, it can be beneficial if it's done the right way. So I don't think there's anything else to show y'all about this company right now. Nah, but as you can see, this was the best. These were the best dividends. Like if you look at it, oh y'all can't see it. I'm gonna go back to it real quick. Um, can y'all see this good, by the way? But like on the far right, it's my little dividends from the past. Like this is pretty much. Is this for a year? How long is this date range? I don't know if it's for the whole. I guess it's all of it. Oh, it's just from 2022 to 2023. It's not all of it. Okay, well, from 2022 to 2023, um, Apple companies like Apple, Target, UPS, eBay, Walmart, Mastercard, Apple. I say UPS, Marathon Oil, Sony. I had all of those, and they combined didn't pay me probably $5 a dividend in about, let's see, from February to June, somewhere around June. Like they didn't pay, but the way I was investing into them was like it was a. I don't know if y'all ever heard of the S&P 500, but it was basically like a joint investing thing. Like I'll explain it this way. Let's say you take $500 and then you divide it into these companies, not all into one, but you divide it. So I spread my money out between a lot of different companies. So I would have a small amount in a lot of these companies, and they would pay me these pennies at a time in dividends every now and then. So I never had a huge amount in most of them that will pay dividends. But as you all can see, I made the best choice when it came to dividends because now you can see the tremendous difference. I mean, so that was definitely the best decision. So, well, I don't think it's much else to share on that. But so who all will watch this video in the future? If you got any questions or comments, anything you want me to go over that you don't understand and you would like to learn about, just ask in comments, and I'll try to get it done. And based on what somebody asked me and I never did, I have to come back and do another video showing this 6 year plan, which I don't even know if I can do, but maybe other people can do it. And if done right, you can possibly gain like 60,000 just through this company. Um, and this isn't in dividends. This is just like your pure profit. like let's just say in 30 years, I don't want to say 30, whatever amount of years you put in, if you can put in enough to where you can get like a 60, actually that's it. That's the number. 60,000, I think. I'm gonna do a calculation real quick. Hold on. What are the sites again? M1 Finance. I can type it in here, I believe. M1 Finance. And what's the other one? M1 Finance and we. Cool. And they also have like I don't know how they word it, but like basically if you invite somebody, they give you like if they qualify like a free stock or free this, free that for doing it. So if you're gonna sign up and you don't have an account, you can either go through, you can actually like people you know if they got an account first, if you would like to help support them and get like an invite link before you sign up and go through that. So y'all can get like the benefit, the free benefit. Or if you want to use mine, you can ask me and I can send you my invite link. But basically just know that they do have those. So you'll get like possibly like something free. It could be like free money basically. Like say they give you a free stock, which could be worth like $10, $6, $5. You don't have to keep it, but you can just use it and then sell it and put towards whatever company you want to buy. Or you can hold it. Because I remember I messed up when I first started. I had this company and it was like $3 or $5 at the time. It was free. And I didn't know what it was. And it went up to $50. But I sold it because I didn't know what it was. So I sold it at like $3 to $5. And I made that little bit of money because it was free. And then I bought other stuff with it. And if I would have held it, I could have had like a $45 to $47 profit and then sold it. But I didn't know what it was. So that might be beneficial to know. If you're gonna sign up, try to use somebody referral link. That's what they call it. Referral link. I couldn't think of what it was. That's a darn shame. So sad. Oh yeah, Robinhood too. That one you can referral link for all of them. Just see if it's a referral link. And if you can't find anybody, like me or anybody you know, um, just type in online. Because if I don't know anybody, I'll just type in online like referral link for whatever I'm gonna sign up for. If it's M1 Finance, I'll just type in referral link for M1 Finance because somebody will probably post it online and you can just use theirs and still get the benefit if you don't know anybody's to use. I've done it. So just let you know. Now what I'm gonna do this calculation before I go. Because I'm gonna have to do it again anyway. Soon. Might as well refresh my memory. Calculator. Get out the way. Okay, what's the calculation? I'll figure it out. Okay. We'll just say at $9. We won about 60,000. So 20,000 gave us, what was 20? For 20,000 shares? That was, I don't know. I'm gonna mess around. So 9. Wait. Okay, this how I'm gonna do it. I'm gonna base it off of four numbers: 900 a month, no week, 900 a week, 1,000, 1,100, and 12. I'm gonna base it off of the lowest. But wait, how much would you put in? Oh man. Okay, we're gonna go with. Let's say a person was making 900 a week, and they put in 100 a week to invest for 6 or 7 years. I guess we'll go with 7. We'll use 7. So we'll take 100 times 52 weeks. Wait, can I do that? Yeah, we can do that. times 52 times 7, I guess. Or wouldn't it be times 6? Because we'll figure it out. We'll figure it out. Okay, that's 5,200 for 1 year. So then I want to times it by 6. Is that much? Okay, that makes sense. Wait, that's smaller than I thought. But I thought it was going to be more. Okay, so this is a 6-year thing. Oh, what happened? It just refreshed. I don't know why. My bad. I don't know what happened. This calculator is terrible. Dude, why does it keep doing that? Oh my goodness, my other computer is so much better when it comes to this calculator. Wait, I'm thinking about something else. Maybe I gotta click this and then it'll stop bugging me. It did. Okay. No, it was that. And then I times it by 6. How much could I get with that? Man. I don't know. But this is less than. Nah, we gotta do more. That ain't gonna get it. That ain't gonna do it. We got to do 300. I have to do 300. So 300 a week times what? 52? Yeah. Times 6. Okay. Okay. So that'll be like for 7 years. If you do 300 a week, in theory, and invest that much at, let's say you got in at $9 per share, times 9. Really? Wait. Wait a minute. I don't know. That ain't right. Something ain't right. That number's too big. I don't know, y'all. Wait a minute now. I think I messed up. Wait a minute. Nah, that number's too big. Nah, that ain't right. That ain't right, y'all. I gotta figure out. I see the amount of money that we could put in, which is 93,600. But there's no way. There's no way that we would have. If that's true, that would be good. But how many shares do we have? That's what I'm looking for, the shares, because I can't calculate what we would get. I gotta figure this out, y'all. Just bear with me. Grab a snack or a drink or something, y'all. I gotta figure this out. I gotta figure this out. Okay, wait. Webull actually might give me a calculation. Where's the trade at? Webull sometimes just tells me how many do I want to buy. 60,000. 60,000. That's more realistic. So it is close. Okay. So it says it's really small because if I make it bigger, scroll down. This site is not acting right, but I'll just tell you what it say because I tried to scroll down, and it didn't. It doesn't do right, but on my phone it'll work better. You know what I need? I need to use my other laptop next time, God willing, because my other laptop is touchscreen and I can just do like this. It'll just scroll down. It should, in theory. But where's the estimate? It went away. Oh my goodness. It was like 700,000 that you had to put in for 60,000 shares. Yeah, show the estimate. Where is it? What? Where is it? They killing me right now, y'all. They killing me. But basically, they gave me the formula so I remember how to do it. Okay. I did it. I did it the wrong way. So basically, what we wanted to later, y'all, is killing me. It is killing me. I gotta do this. Okay, we want to do 60,000 shares times 9. I was doing it the wrong way. Okay, so we want to do it this way. So we got to do it based on shares. So for 60,000 shares at $9 a share, if in theory, when buying it, it'll be at that price. I'm just basing it off of that. But at the current price for this company is $11.47 per share. But I try to buy in when it's at $9 or something manually. But and when financing goes in automatically, whatever it is, all year long, every Friday. But for this example, we'll just use $9 per share. So if we was to put in for 60,000 shares at $9, $9 per share, we would have to spend 540,000. Okay. Hold on. Now, that's a lot of money already. How the freak? Wait a minute. Okay, we gotta slow this down. We gotta slow this down because there's no way I can put that much in 6-7 years making what I'm making. Nah, not for me. But for somebody else, that'd be good. Like the dividends will be really good on something like that. You got to load this down for me. Okay, so I guess I'm going to 10,000 shares. That's too much for me right now. Okay, so let's take this down to 10,000 shares times what, 9? Yeah, we're gonna base it off that. Hit the 9. Come on, hit the 9. Come on. That's right. That's right where I want it. Okay. That would be pretty good though. The last calculation, but not what I'm making. Not right now. So let's see, 90,000 would give us at $9 a share, 10,000 shares. And then what we would want to do is take the shares, 10,000, and then times it by 35 for the standard dividend that I go by. And that'll give us 3,500 of every quarter or season. And then we times that by 4, that's about 12K, something like that. 3 times 4 is 12, so a little over 12, probably about 30, maybe 14. Yeah, 14 times 4. And this would be automatic. That would be nice. I don't know what I would do with that money. I really don't. But just imagine if you built it up to where you could get 3,000, a little over 3,000 every 3 months. I don't know what I would do with that money. I really don't right now. I can't even think. But I do imagine certain things that I would buy. But this is my realistic 6 to 7 year plan. If I can focus on putting 300 aside to automatically go into this to these investing, let's just say investing every week. That's the way that I would do it. I was doing that, but I stopped. But the problem for me was I was putting it into cryptocurrency instead of this. I didn't know about this at the time, and I lost a lot of money. And then I learned that this was the safest way to do it, and I discovered this sometime later. I don't know how long later, but this is where I will put my money now because I will automatically win. So that's what I wanted to show this person. I was telling him about this 6, 7 year thing. So I guess I'll do that. Um, Sheena says I would take a slice of the pie and work my way up to the stocks market. If that works for some, it will work for us. I hear you, Connie. Yeah, there's some people that got like a whole investing portfolio where they just get paid off of dividends, like tons of money, like way more than me. But I mean, like some good. They got a good amount into it, and they get a good amount back. So like once you get a good amount into it, like imagine this, because I speak to my family and other people about investing, and some of them get taxes back at the end of the year or around that time. And a lot of people might say that they blew it and they bought this or bought a car and then their boyfriend wrecked it or blah blah blah. Whatever they did, it was kind of looked at as like a waste or a regret because it was kind of ruined fast. Not saying that you would do that or what happened for y'all, but it's probably a portion of that if you get taxes back that you can use towards something like this, or maybe exactly that. Like I imagine if I can get a clean, free 10,000 to just that I don't have to pay anybody with, like it don't go towards this, that, and this, where it's just ate up. If I can get that, you already know where it would go. Well, in my mind, I've already thought where I would put it because in my mind, I always try to think of, well, here and there, I always try to think of how could I get more into it? How could I sacrifice more into it? If I can get this amount into it, then I could get this back. And, I think about it like that because the more I can get back, the easier my life becomes well, financially, because right now, the type of work I do, I'm an independent contractor, self-employed. So if I don't work, I don't get paid. There's no paid time off for me. It's you work, you get paid. If you don't get paid. That's how it is. So, um, let me see what else. And I have the type of job where I pay taxes. It will actually the first 2 years I paid taxes, and then this year I was well, the state paid what they supposed to pay me. They owe me. I put it that way. They owe me this time, so I don't have to pay the state, but I have to pay the IRS. uh, but that's how my job goes. So I'm used to paying taxes instead of getting taxes. So I don't get a huge amount back like that anymore. But for those who do, maybe this can be something that you can put towards, because it'll just generate money back for you automatically. And the more you have in it, the more to give back to you. And you can compare this to if you got like a Roth, an IRA, 401k, like a CD. I can't think of the other ones if there's anything. It's a few other ones, but anyway, if you got those, you can compare what you would get back from this versus that. And this you will have control, way more control over if you don't have a lot of control over the other ones. Because when I did a 401k, it wasn't done long. They take a percentage of your money, and depending on what you allow them to get, 2%, 4, 8. I don't know if they do 6, but of your check each time, and they throw it into this investing thing. But basically, the 401k is still investing in the stock market. They probably don't tell you that, but that's what it is. But it's investing into like a group of companies, and you reap the benefits as those companies go up, in price, which is the same thing that it's like with this company, it's just one company, not, a bunch of them. And You will still get dividends from a lot of those companies in your 401k as well. You should anyway. But with this one, I just think it's easier, and it probably pay a lot better than those other companies doing dividends. And since at the moment it's kind of cheap still, it's a lot easier to buy, cheaper to buy. But you can compare what you would get versus this versus that. Because my 401k, with a little bit of money that it was taken from me at the time, it didn't build up much, and it wouldn't have. I mean, it would have long term wise, but like I could do better this way. I already know it. Um, but it just comes down to what you put in. The more you put in, the more you get back faster. So yeah, it comes down to what y'all can sacrifice and what I can sacrifice. But I went to a lower sacrifice because things got rough and tough for me. Like, but my workflow used to be crazy. I used to really, really be out there working like 10, 12 hours a day, and which is not biblical. It's not. I used to be out there, and then I would put way more money into it back then, but I was putting it into the wrong thing. I was putting it into the wrong thing. So now I know what to put it in, but I don't know if that 6 year, 7 year plan will work for me because I'm currently not putting in that amount of money. But I do want to put in more money in the future. But we'll see. I ain't gonna keep y'all too long. I'm getting hungry again. Oh my goodness. Oh my goodness. I'm gonna go eat. I'm gonna go in the kitchen. Well, that's my advice on the stock market on how you can automatically get paid. This is automatic, and you do whatever you want with the money. But from M1 Finance, I have it set to automatically go in from my account. It takes the money out. You set the amount of money you want to take out of your account if you want to do it like that. But I have it automatically taken out. I just take 25 out, and it automatically invests 25 for me. I have it set up that way. And then and it automatically reinvests the dividends. So if they pay me 60 to 80 or whatever they pay me, I don't even spend it. I just have them send it right back. Just reinvest all of it. And Webull is, I have it taking 25 out of my account every Friday too, but that's the one that I can't have it automatically invest for me. Excuse me, due to their settings right now. So I have to manually invest it. So I just hold the money until it goes to its lowest point, and then I buy in. But what I'm planning to do with that one is build up the dividends to where it's decent enough to where I can take them dividends, like the money, and then use it and spend on whatever I want. So that's my secret idea. Like I want to build it up to the point where I can get like a decent amount, and I'm gonna take it and use it. God willing, that's the plan. That's the plan. Because I can be paying for stuff like I be thinking, y'all. I be thinking. I don't know about y'all, but I got Netflix, and Netflix, I'm paying $20 a month for Netflix, right? Because I just decided to try out the highest one. So $20 a month is $240 a year, and I can, if in theory, I can build up this other account to make 60 every quarter. That's exactly it. That can cover my Netflix bill. In theory, I be thinking like that. I'm like, man, this can cover this bill, that bill, blah blah blah. I be thinking. And of course, I be thinking about buying books with it and other stuff with it, but it's all future stuff. I'm just building it up, you know. All these expensive books, like one day. Oh yeah. So anyway, it's small right now, but it's going well. It's a win-win. I'm going to eat. Peace be to y'all, to the saints. I'm hungry. I got hungry again. I tell you, I wasn't even supposed to be on here that long. Thanks for joining me, Sheena and Connie. I'll see what comments I get about this. All right, y'all. I'll be back to read again soon. I don't know when, but I need to feed my soul soon. So you'll see me reading. I don't know when. All right. Let me go eat.